Hello everyone. So this is the video presentation for Enterprise Information Systems for Team Chester. So myself Sagar and my teammates are Vishal, Shreya and Chandan. So today I'm going to talk a bit about analyzing our current business position of our team when compared to the other teams. If we look at the current business position of Chester, we are fifth in terms of cumulative profits by the end of round 8 with a total cumulative profit of 43.92 million, and our market cap is at 234 million with a total market share of 15.27% when compared to the other teams. So if we look at some of the decisions which led us to finishing fifth in by the end of round 8. So in round 2 we had introduced a new product called Camera. So we did that because the high-end segment has a zero age requirement, and we're hoping that Camera will start doing well when TKDM is introduced in round 4. So we basically followed the same strategy from our practice rounds. But this did not work well as we had hoped, because other teams also followed the same strategy, and there were a lot of products in the high-end segment, which led to increase in the competition in that segment. So for round 3 we also decided to introduce a new product called Crafty in the traditional segment. So this was done because of the other product Cake, and what we had done is we had set a very high automation level for that product, which made it difficult to manage the R&D date for that product. So due to that, we decided to introduce a new product called Crafty in order to gain some market share in the traditional segment. So in the further rounds, our losses basically started piling up due to the decisions which we took in the previous rounds. So as I said, the product Cake was not doing that well because of the high automation level which we had set previously, and it was getting difficult to manage the R&D date for that product. And the introduction of the new product Crafty as well, we were not able to manage the age for that product as well, because it was a new product, and because it had a low customer service score, it did not sell that much. So we suffered due to that, and also due to the investments in TQDM and in investments in automation. We had a very high total loss. Our loss at the end of round 5 was close to 19 million, which was the highest when compared to the other teams. But I think we recovered. We made a good recovery in the next few rounds. So at the end of round 8, we finished with a total profit of 30.8 million in that round itself, which was the third highest overall total profit in that round. So I think we ended the simulation with a good position. So we were also able to sell some stocks and issue some dividends at the end of round 8, which also made the position of the company a bit better. So this was the position which we had at the end of round 8. As you see, the total profits are 30 million and the cumulative profits are close to 43.9 million.
Here are some of the key points of redoing this exercise all over again. If we were given an opportunity to redo this entire simulation again, Chester would do the following. The first thing is we would fix the automation. We would definitely revisit to round 2 and increase the automation levels in slower steps or intervals for the products, especially Cake and Sidar, that belongs to the traditional and low-end segment. Initially in the round 1, the automation levels for these products were at 7.5. In round 2, we made an indecisive bad decision by increasing it to 10. We should have increased it to 8, or we should have retained it to 7.5. But apparently, why this was very hard for us, because it became extremely difficult for us in the further rounds when it comes to R&D and repositioning the product based on the ideal age and revision dates. So we would fix this one. The second thing was the sales and promo budget. One thing that was very intriguing and interesting to me was the sales and promo budgets of other competitors for the same products in the segment. were similar to us, but they had better customer accessibility and awareness percentages. So what we would do is we would start initially with say $1,000, and then we would increase it in the intervals of $100 to $200 rather than exponentially increasing it to say $1,800 or $1,900. Also, we realized that in the capstone career, there is a graph which says that there is a substantial diminishing returns after $2,000. What does this mean? It means that after $2,000, even if you spend anything more than that, it is not going to fetch us any better customer accessibility or awareness. So we would also take care of this one. And when it comes to pricing, we could have reduced the prices in traditional and low-end segment when our competitors had lowered their prices, and still we could have made some better profits and a better margin for these products. Here is a snapshot of the market share from round 8. And then Chester would also diagnose the stockouts. We had some small stockouts in many rounds for different products like cake, coat, sit, camera, etc. And we also realized the impacts of stockouts to our profits, and we would take care of that. And the last one is the buying and selling capacity. We should have planned the production accurately as possible, because we could have calculated the demands, the forecasts, and the year lag between the new capacity when it actually comes to picture or when it becomes available. So we would have taken care of buying and selling capacity in a little different way and planned a little ahead of it. But however, when we were asked to summarize the entire situation, we can say that we were really happy with the cash position, the emergency loans. We didn't have any emergency loans, and the debt to equity ratios were pretty good. The leverage was fine. The working capital was fine. We also had dividends, and we issued stocks. We shared the stocks, and hence our finance position was quite all right in the end of round 8, which was quite satisfying and convincing for us as a team.
Hello everyone, I'll be walking through Chester's significant takeaways from the simulation experience. So our group had a restricted experience to begin with on the business choices that we made, and with the experience we gained through these rounds, we currently have some extraordinary bits of knowledge of working in as a group to plan, strategize, and analyze the decisions to accomplish whatever business objectives we have defined. So, and we could relate to the new iPhone's release earlier this month. We were wondering how and what the Apple would have taken care to make decisions in terms of pricing, marketing, and their R&D decisions. So, our group's overall and significant takeaway from the simulation experience would be defining a clear strategy and arranging our choices to execute the procedure. And this would have permitted us concentrate on the overall bigger plan and even adjust our momentary business choices to it. And so we also realize the importance of teamwork, that every team member has a remarkable point of view to bring to the table during each business cycle. So, and it is extremely important that we focus on every team member's point of views, strategies, since we never know where the ideas pitched in from the team member might come in handy and then can be helpful and make a real impact. And we also learned that every one of our decisions that we make may not be the best, and we might have to return to the original decisions to tweak those decisions to help benefit our company. And we also learned how to be patient, because in some rounds we may not perform well because we would have invested in a new product which is coming in the next rounds. So we learned how to be patient and wait for the results of the next round to see how our new products are performing. And one more point is that we captivated how to use the various resources available to us, like reading capstone career reports after every round, financial reports, and industry conditions report to understand the various facets of the business cycle. And that helped us a lot in understanding what decisions that we should be making or basing our decisions on. And we currently have a thorough understanding of various financial concepts that we lacked clear understanding before beginning of this course. Like, we understood how liabilities, assets, and leverages could affect the company or contribute to company's profit margin. And we also now know how to read the income statements and how to settle on different production, be it making decisions in terms of sales forecasting or marketing decisions. And so the final takeaway is that we lack clear understanding for quite a while, because we had a lot of finance available during the end of the rounds, and we didn't have a clear-cut strategies as to where to invest that money in. So, and we settled on some not so very great decisions that influenced our company's performance in a great margin. So now we know that, like, we can invest and make wise financial decisions and choices. And this is a snapshot of the stock market summary from the final round. So we closed with $72.42 as our share value, individual share value, with a change of $23.19 from the previous round. And our company's market capital is 234 million, which means our company is valued in the market as 234 million. And yeah, that's it for today, guys. Thank you so much for watching the video.
Hello, I'm Chandan Malmurdy from Chester. If we were to provide business tool and process recommendations for managers for making decisions, they would be to manage three different things. That would be data management platforms and AI and machine learning capabilities, and also including analytics and reporting capabilities into the business processes. So firstly, data management. Data drives the business processes and success of the organizations across all the industries these days. With more data comes more easier access to analytics, which in turn we can make use of the analytics to seize more opportunities and ask more questions and also solve more problems. Everything from including from the data access, data quality, data integration, and data preparation to data governance. We can manage this data platform efficiently so that we can enable our business to thrive in the market. Using big data platforms like Hadoop ecosystems to house cross-departmental data lake would be a better option, which deals with huge amount of data and which also provides with analytical capabilities in the market. With various tools, adding data warehousing capabilities would also be a good option, like Redshift, which readily connects with all the data visualization softwares available in the market outside, like Tableau and Power BI. The second point would be to inculcate artificial intelligence and machine learning capabilities into our business processes, where AI-based technologies like natural language processing these days extract meaningful information from underlying data. For example, we can use chatbots to solve the problems of various customers without even the involvement of without any human intervention. Also, predictive modeling means business leaders can make real-time decisions from everything from customer buying patterns to changes in the market, and can make make decisions about the products, pricing and policies, and using those insights. And the third and the most important one would be inculcating analytics and reporting capabilities, where business intelligence platforms these days enables us to import, clean, and investigate data, so decision makers can follow up on the users' experiences and enhance them by understanding the problems that they are dealing with. Business intelligence, where we can also use, for example, using partitioned and indexed historical data lake in the same big data Hadoop ecosystem, we can develop a series of models machine learning models and statistical models using Python or R language, which are powerful statistical models and machine learning model building tools, and also combining these tools with the capabilities of data visualization capabilities of Power BI, Tableau, or ClickView for any other visualization softwares in the market. In this case, would definitely be a great option and a recommendation for the business. Thank you. Over to the next teammate.